Ladies and gentlemen, good day and welcome to the Xelpmoc Design and Tech Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ravi Udeshi from EY. Thank you, and over to you, sir.
Thank you, Sarthak. Good evening to all of you, and welcome you to the Q2 and H1 FY26 earnings conference call of Xelpmoc Design and Tech Limited. We have sent you the press release, the investor presentation, and the same has also been uploaded on the Xelpmoc website as well as on the stock exchange. In case anyone does not have a copy of the same, please do write to us. To discuss the results and the outlook for the future going forward, we have with us today the top management of Xelpmoc, represented by Mr. Sandeepan Chattopadhyay, Managing Director and CEO, Mr. Srinivas Kura, Full-Time Director and CFO, and Mr. Jason Jose, Full-Time Director. Before we start the call, I would just like to remind you that the safe harbor clause applies. With that said, I now hand over the call to Mr. Srinivas Kura. Over to you, sir.
Thank you, Ravi. Good evening, everyone, and welcome to Xelpmoc's earnings call for Q2 and H1 FY26. I hope you and your family are doing well. We are still seeing challenges in the startup sector due to volatility in the funding within the emerging technology sector. As mentioned in our previous call, we are maintaining our focus on the corporate segment, especially on products and certainly in-house solutions. Our consolidated operating revenue for the quarter, it was recorded INR 7.6 million for Q2 FY26 as compared to INR 16.3 million in Q2 FY25 and INR 7.8 million in Q1 FY26. The revenue decrease on the year-on-year basis is on account of transition from startup segment to corporate segment, and more importantly, the focus on in-house product. We are seeing interest from corporate client for our services and the solutions what we are building. However, the conversation is expected to take some time, hence we expect our revenues to gradually start getting traction over the next few quarters. I would like to state that we are in process of conducting pilot project in age tech and expected to monetize by Q3, Q4 FY26 end. Operating EBITDA adjusted for the quarter was negative INR 16.1 million as compared to negative 10.2 million in Q2 FY25 and negative INR 16.4 million in Q1 FY26. I would like to give some context to the EBITDA loss in Q2 FY26. Though our operating expenses have reduced, however, the decrease in revenue was due to the said losses. We expect our operating costs to be stable from here on. Net losses for the quarter was INR 19.3 million, partially due to INR 2.5 million of ESOP expenditure. This in comparison to a net loss of about INR 11.1 million in Q2 FY26 and net loss of INR 18.8 million in Q1 FY26. Regarding the change in revenue, I would like to state that 100% of our revenue was from the corporate segment. We expect that this focus on corporate segment and focus on data science will enable us to increase our revenue. Our team size is about 54, including employees, interns, consultants, as compared to 52 in Q1 FY26. Till date, we have served 65 clients. The fair value of our investment in portfolio companies stood approximately INR 703.4 million as of 30th September 2025, as compared to INR 572.7 million as on 30th September 2024. I will discuss the portfolio companies in detail now. Mihuk is cutting-edge conversation AI platform designed to provide real-time assistance and analytics on a customer agent interaction. Mihuk featured as a phenomena-based voice-to-text engine that delivers industry-leading accuracy along with pre-built AI models tailored for multiple industries. Its hybrid architecture combining edge and cloud technology ensures secure and real-time data processing, enabling total workflow automation and mixed language understanding. MIO currently has contracted ARR of INR 1 billion. It counts Tata Motors, Canara, HSBC, Angel Broking, and Pine Labs among its top clients. Recently, it signed a multi-million-dollar contract with Tata Motors, which significances a greater acceptance of its products. It has also onboarded HDFC Bank as of its clients during this quarter. Coming to our next startup, Woovly. Woovly operates across two dynamic business verticals. First, it has a video commerce marketplace dedicated to lifestyle products. And second, it has a SaaS offering, Live2.ai, which provides interactive shoppable videos and live commerce solutions. Live2.ai has two core products, the shoppable social wall and social media publishing and reporting. Currently, it is achieving an impressive 3.2 million ARR in USD, with 245 brands utilizing the platform and operating at an EBITDA positive status. It has notable enterprise clients which are industry leaders such as Henkel, L'Oreal, Samsonite, Titan Group, Decathlon, with many more global brands in the pipeline. Our next startup, Snaphunt. Snaphunt is a remote talent marketplace that matches employers with the best talent across geographies. Snaphunt is an innovative recruitment solution company. They recently launched AgenticZen.ai, a comprehensive digital recruiter product alongside their fully managed recruitment services for SMB and startups. SnapHire, which debuted in 2022. Revenue for July to September 2025 reached USD 109,000. Currently, they have 8.5 million job seekers and 10,000 employers on their platform, positioning them as leaders in the recruitment space. Pencil, a Bombay-based startup that has been at a forefront at the creator economy since its establishment in 2007. Pencil is dedicated to empowering writers by providing innovative tools that enables them to create, enhance, and monetize their stories. Recently, they launched AI-generated audio supported by a grant from Google India, which is now live. Additionally, Pencil has produced samples of AI-generated books in multiple languages, including English, Marathi, Hindi, and more. They have signed USD 950,000 service deal with Alphabet for a period of 36 months. Its revenue for July to September 2025 was INR 109 lakhs. Our next startup, the Star in Me, an innovative learning as a service platform dedicated to driving organizational excellence for individuals of all genders. Recently, TSIM has secured new clients, including Siemens and Prata. It has recorded a revenue of INR 3 crores in H1 FY26. The company has also enhanced its platform by introducing new features designed to elevate the coach-partner experience and improve the client discovery process. Kidstoppers, a unique discovery platform designed to support parents throughout their parenting journey from conception to age 16. With the help of Xelpmoc, KSP has developed a machine learning platform that analyzes over 100 data points from its users. The primary target audience consists of first-time parents aged 25 to 34, who make up 75% of platform traffic, with 45% accessing it via iOS. KSP has successfully monetized its content through brand partnership and subscription revenue, and has been improved monetization thanks to long-term brand collaboration that extended its reach into the Tier 2 across the region. It recorded a revenue of 60 lakhs in H1 FY26. Coming to our newest startup, Biome. Biome is a venture studio in the business of investing and mentoring startups. Its startup investment includes Zoop.money, a white label loan platform for home buyers in partnership with real estate developers and financial institutions. Zoop.money is now process of raising 8 CR from various sources at a valuation of INR 80 crores, marking a 4.4x valuation uplift. Biome is also investing INR 2 crores for a 10% stake in Ostafort, an IIT Hyderabad spin-out, developing India's first silk-reinforced, fully resorbable implant platform to replace polymer implant in non-load-bearing orthopedic applications. As you all know, typically Xelpmoc engages with startup at the incorporation stage, pre-seed funding stage, or pre-revenue stage. Most of our startups have just begun generating revenue and are still in cash burning phase. However, few of our startups such as Mihoop, Govli, and Pencil, TSM are performing well, while others are still working to secure their next round of funding. Consequently, they are concentrating on increasing revenues and maintaining a conservative cost structure. The startup ecosystem continues to experience a significant challenge, and we are focusing on scaling up Xelpmoc's own products and services. Our emphasis on revenue generation in the corporate sector, particularly in data science, artificial intelligence, and machine learning, as we aim to develop our own in-house products. At this time, we are not looking to onboard new startups unless we encounter exceptionally some good opportunities. We are committed to achieving EBITDA profitable as soon as possible. The new products that we are building should help us to reach there. With this, now I request to open the floor for question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question comes from the line of Abhishek Agrawal from GemQuest. Please go ahead.
Yeah, hi. Good evening, Sandeepan sir and Srinivas sir. So my question is specifically to Sandeepan sir. So since we have now finally launched our product Relay, so just wanted to understand the dynamics of the age tech industry and how are we trying to I also know that we've recently exhibited this product in Mumbai. So I just wanted to understand what kind of response did we get? Are there some changes that we need to make to this product, to scale up, or we are good to go and then we'll see good amount of revenues and profitability going forward? Just a little color on this front, and what is the TAM and opportunity size for this kind of a product?
Sandeepan, shall I take that call?
Yeah, Jason, you can take that call.
Jason? Yeah. Hi, Abhishek. Good evening. This is Jason. I'm driving the Relay product. I'm happy to answer these questions for you. So, age tech as an industry, age tech as a sector focus for us has been a planned decision that we took about a year and a half ago. And since then, we've been on stealth working very closely with operators in the space. To give you an overview, as per all the estimates from all the major sources, whether it's PwC, ASLI, or whether it is Mordor or any of the larger publications, the aging or the graying market in India is estimated currently at close to about 15 billion. Now, when I talk about 15 billion market size, this includes whether you have aging at home, which is the home healthcare setup, or you have aging in communities, whether it is as part of senior independent living or whether it is assisted living communities. At a very conservative 5% technology spend, which is what the current situation with the market is, into a very aggressive 3 to 4 year outlook of about 10% spend on tech, largely propelled by IoT, EMR, EHR, fall detection, so on and so forth. That's the TAM that we're looking at, close to about in the range of about 6,800 or 7,000 odd crores, going up to about 14,000 crores in that sense. So that's how large the TAM for technology adoption in this space, which is currently growing at a clip of almost 30 to 40% year on year. And this is just senior independent living as we see it. Now, while independent living is also propelled by, let's say, real estate and the adoption of, elder first, policies by various RERAs, we are also seeing that a lot of growth is actually being spearheaded by the assisted living space. So, to answer your second question, after we had a fantastic exhibition of Rely at the ASLI exhibition conference, which is an annual conclave of the industry in September, most of the inquiries and where we're seeing a lot of active engagement with customers is actually in the assisted living space.
Hello, Jason, you are not audible. Operator, can you check? Even Sandeepan was speaking, even he was not audible.
Sir, they are audible on my end.
Okay. Okay. Abhishek, were you able to hear me thus far?
No, I just missed out on the last part.
Okay. Otherwise, you were able to hear out, right?
Yeah. Yes.
Hello.
Okay, that's great. So I'll just continue. So we are seeing a lot of to continue where I was. We are seeing a lot of inquiries, a lot of active conversations currently with customers that are in the assisted living space. We are also seeing that we see an opportunity for Rely also in the home healthcare segment, which is typically dominated by hyperlocal nursing agencies where there is an opportunity to build a strong digital layer, a tech layer for them, that allows them to comply with potential policies that the government may come up with. So that's the opportunity that we're looking at. Currently, Rely in its two variants currently addresses the senior independent and the senior assisted living space. In the coming quarters, we will also launch a variant which will be for the home healthcare segment. Does this answer your query, Abhishek?
Sure, that does. But just a clarification on, what kind of deal size can we actually grab, and how are we actually looking at customers in this segment?
So deal size is essentially Rely essentially is SaaS for operators.
SaaS, okay.
It's very similar. Like let's say you have, the model is SaaS. The business model is typically if you are in the senior independent space, you have customers that either operators or property managers of these spaces would pay you on a per apartment per month basis, and these contracts are typically long tied in, typically on a year or 2 year contract. Similarly, if you look at the assisted living space, you would have contracts that would be tied in on a per bed per month basis. Again, these are long contracts. So we are following the typical SaaS model. We are also offering minor customization so that these instances of that customers use are to that extent very relevant for their use cases.
Sure. Just on the next part of my question, we were also looking at one point of time, if I'm not wrong, correct me if I'm wrong, at one point of time we were also looking at this legal automated market where we were trying to automate and feed independent, if I'm not wrong, independent feeding kind of a thing for legal part of the industry. So where are we in terms of that, and are we also building some kind of a product into that industry or that sort of thing?
I'll let Sandeepan take that question. Sandeepan?
Oh, am I audible? Can you hear me?
Yes, now you are.
So, see, legal and again, legal focused on BFSI. So some of the applications we have done is already in the market, in the field. We are getting paid for it. The first contract or so that have come. This is, for example, for RERA reconciliation for real estate companies. And again, we think that the use case is so varied that building a product in this space is difficult. So we have built a framework, which is our Docu X-ray. And that, along with the kind of setup learning that we do for a specific problem, and then going for the class, that is in motion, and some of the contracts have already started coming in, as Srini was mentioning, as well as some of them are in POC. So yes, that docu X-ray part we are completely going on with.
Sure, sir. That helps.
So basically, just to add what Sandeepan said, docu X-ray is a framework which we are using in the real estate industry, and we are also using for one of the company, again, into the accounting and finance side. So the same framework we are also planning to use in a different industries, like Sandeepan said, BFSI, insurance sector, real estate, and accounting.
Sure, that helps. And just one last bit, what is the environment?
I think someone else should ask the questions now.
Okay, sure, I'll
You
get
can
back.
just join back, I think. Yeah.
Sure. Thank you so much.
Thank you. A reminder to all participants of the conference that if you wish to ask a question, you may press star and 1 on your touchtone phone. The next question comes from the line of Raghvendra Rao, who is an investor. Please go ahead.
Yeah, hi. Good afternoon, everyone. My question is, is your focus only on AI? Because I was going through your website and where I see that you also have a lot of non-AI stuff. So I wanted to understand typically what, going forward, what would be the split in revenue from your AI based solutions and non-AI solutions and the startups. So if you put this in 3 brackets, then what would be the split in your revenues and what kind of margins do you normally operate on?
I leave the margins and all. I just want to clarify something. AI is a kind of a current buzzword and philosophy. The all-encompassing part is data science. And in data science is where Xelp has always been focused. So be it our startups, be it services projects we do, the products we build, we play to our core competency of data science. Given the current situation where the lot of proliferation and explosion of tools and hardware for this kind of data science, which is known as AI ML, that is popular, that of course is something that we are also participative in because we can't be inert to the environment. But when we look at our work, it is data science, and that's what it's going to be of all parts. So there is no distinction between an AI project and a startup. A startup can use an AI component, which we supply. Now, these are the main 3 categories that we are looking at: startups, corporates, and again, corporates can have projects, and corporates can have execution or acceptance or purchase of a product or SaaS service. That's how we can look at the categorization of how the revenue streams and the focus of the company would be. The remaining parts, Srini can answer as to what we are looking at. I don't know if we have a plan for that, but I'll let him answer the financial part of it.
Yeah. So basically, as Sandeepan said, that right now we are not focusing much on the startups unless and until really some good opportunities comes. But or else the rest of the revenue, what you are going to see is it's going to come from data science. You can say it's a service or a AI, ML, or a SaaS platform.
Okay. But any indication in terms of what could be the average margins in terms, and what could be the numbers that you are expecting probably in the next financial year?
So right now we are looking at to be profitable. That's the focus for next 2 quarters. And basically we want to make a Relay and this docu X-ray, which we are building the framework to be successful. Once we come out of that, then we can really look at margins, etc. But the first thing is we are looking at reaching out to a break-even in next 1-2 quarters.
Okay. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants of the conference that if you wish to ask a question, you may press star and 1 on your touchtone phone. A reminder to the participants, if you wish to ask a question, you may press star and 1. The next question comes from the line of Abhishek Agrawal from GemQuest. Please go ahead.
Sure. Thank you for the follow-up. I was just trying to ask. I was just trying to ask, sir. We've spoken about industry slowdown in startups, and things have recently turned a little bit, and we're also now looking at launching a few products, and there are so many use cases of AI and stuffs going around. So, sir, are we actually looking at building some more products, or are we in active discussion with people, organizations, or developers to come out with some unique kind of a offering for the market, apart from this Rely and Docu X-ray? And also, if you can just throw some light on the startup ecosystem and our approach to this kind of a segment.
Okay. So Rely is a theme for Elder Tech that will have ongoing additions to the product suite, as well as probably new products. And as we find new niches, on a need basis, products will be made. Docu X-ray, as I said, is a framework. And currently, we are using it in the legal tech space, in the fintech, legal tech, financial legal tech space. And there are other applications that we are actively pursuing from market interests. So products will form on that part, getting the framework, getting the basics correct, getting our core competencies in was the first phase. Whether we will package it as a product, whether that will be ever feasible and all, that we don't know in some of the spaces. In some spaces like Rely, we believe there will be products that will come in on that part. Coming to the second part of your question, there has been a turnaround in terms of the existing startups, and some of the survivors who held on are getting more and more funded. But new startups, I still think, are facing quite consistently heavy headwind. And I don't see that turning the corner in the next 3 months or so. But post that, maybe in the new financial year, I think there could be different themes coming up which would be going there. We will always, as Srini said, we'll always pursue good startups and all those things. But again, the mode in which we used to operate, where we used to put in a lot of our own investment in terms of time, money, and R&D, that we will not be doing so much in the first few instances, unless the exceptions are always there. But mostly that is our theme. We will participate in startups which look promising and who can actually afford the cost. We're not going to charge profit from them, but show the cost part of it and the execution policy of it.
Sure. Thank you for that, and wish you all the very best.
Thank you so much.
Thank you. A reminder to the participants that if you wish to ask a question, you may press star and 1. Our next question comes from the line of Om Prakash Shah from Amite Investment. Please go ahead.
Thank you for the opportunity, sir. Any update on Signal and Soltrack Studio, sir?
Sorry?
Any update on Signal and Soltrack Studio, sir?
Okay. So, Srini, you want to take that?
Yeah. So, as far as the Soltrack Studios is concerned, Soltrack Studio, we wanted to go ahead with the content, etc., on the kid space, which did not work out. Maybe, I think, about 4 to 5 quarters back only, the Signal has already written up the investments, what has been done in the Soltrack. As far as the Signal is concerned, Signal, we are still exploring about how to take it to the market on the education space.
Yeah, so I'll add to that. So we have been basically trying to work on both modes, direct to consumer as well as through the schools. I think right now there is a bit of a policy paralysis, you may say, in terms of schools in how to adopt AI and all. And they're a little skeptical about whether it's going to adversely affect the kids and all. And there are government directions and all which are not exactly very clear. So there is a low absorption and all. We did some POCs, but finally it was a kind of a thing. Is it going to make them cheat for the homework? And also those sort of questions have come. There have some opportunities that we are looking at out of India also, where the market is slightly more matured. And those talks are in progress right now, as well as the talks with different schools. I don't think anything big is going to come out in the next 2 months or so, but in December or so, we expect some movement, and January, we think they will be having some clarity as to how they want to pursue it, and we can accordingly suit the product to those requirements and try to go to market with that time. Hello?
Thank you,
Mr. Om Prakash, could you please repeat your question?
No, sir. Thank you, sir. Thank you. I got the answer.
All right. Thank you.
Oh.
Ladies and gentlemen, a reminder to all participants that if you wish to ask a question, you may press star and 1 on your touchtone phone. Our next question comes from the line of Siddharth, who is an individual investor. Please go ahead.
Good evening, sir. I hope every one of you are doing really well. I have just 2 questions. Number 1, your stake in Mahyap and Bovli. Do you have any plans to come up with IPO by 2027-28? And during the IPO, do you have any plans to redeem the stake so that your investors in Xelpmoc can be benefited, because it can be through special dividend or it can be to something else? Because the investors are sitting since 2019, where the IPO price was somewhere close to 66. And my second question, apart from this, is, when do you think that you will turn EBITDA positive? Do you think that in next 1 or 2 quarters things will completely, change, or it will take some more time?
Srini, you want me to answer that? Sorry, yeah, go ahead.
Yeah. So just to answer your query, Biome is a very new startup, and it's hardly about a 1-year-old company, and it's too early to comment whether Biome will go public by 2027 or not. Or they will.
No, I think he asked about Mihoop and Woovli. I don't think Biome was mentioned.
Correct.
Yeah. So as far as Mihoop and Woovli is concerned, Woovli may be or may not be, but yes, as far as Mihoop is concerned, Mihoop is looking at all possible ways that in case if everything goes well as per the plan, they should be able to go subject to their board approval and shareholders approval. They are doing pretty well, and in fact, they are able to go deeper engagement with their existing customers, and they were also able to sign up new customers. They are also doing some sort of the pilot test with some sort of an engagement with the OEM partners. And as far as our profitability is concerned, as you said, that we were concentrating on products, and when you concentrate on product, initially it takes time. So the target is next couple of quarters we should turn to profitability or break even. That's what we are working towards.
Okay. So one last thing which I want to ask you is that because I'm an investor in stock market and I have invested in your company because I see immense value in your company next few years from now. I understand it's not so easy to make it profitable in 3 months, 6 months down the line. And I understand that it takes time, but the way you people are going, it really looks good to me by 2029-30. I can be wrong, I can be correct, that's a different thing, but I see immense value. Now, the problem with the capital market is there are certain rules by SEBI that ESM stage 1, ESM stage 2, and that's the only reason that your market cap is below 500 crores and it's close to now 200 crores. Still, it does not cross 500 crores. All the investors will suffer because though they see immense value in your company, though the fair value of a company is close to 500 crores or even 1,000 crores by now, still, because of this rule, there is a very low possibility that shareholders will be rewarded in next 6 to 9 months. So, sir, I just want to request you on behalf of the shareholders, including me as an investor, if there is any possibility, to take your company out from ESM stage 1, that will really help other mutual funds to enter in your company, some foreign investors to enter in your company. So are you focusing on that so that, in future your shareholders can be rewarded like this?
Sorry, go ahead, Srini.
So I think the best to answer this is once the shareholders start seeing the performance, especially in terms of numbers, I think that should be taken care by the markets.
Okay.
So in summation, what we are saying is we are going to go to our plan, execute that, achieve whatever goals we are setting for ourselves. And obviously, as you know, just like you, we are also not only investing everything that we have, our time, and most importantly, the time and effort, all the creativity. So obviously, that's the goal that we also seek. It has not been the exact everything being successful part of it, but at the same time, the mission we set out to, and when we did start, we said it's a 7 to 10 year game. It's not a 2-3 year part of it. I think we are pursuant and consistent with that. The kind of successes we have seen with our first batch of startups and the others which are coming up or in different stages of maturity, I do think we are on the right track. There were setbacks, there were policy things that we have discussed about the government projects and all which we have gone out of. There's resettling time in, but as long as we are able to meet the current plans and all those things, the traction from the market is encouraging. I think that will speak for itself and the market will self-adjust for that.
Okay. Thank you.
Thank you. A reminder that you may press star and 1 on your touchtone phone to join the question queue. Our next follow-up comes from the line of Raghvendra Rao, who is an investor. Please go ahead.
Yeah, good afternoon. So I also wanted to, quickly check on, so you did mention that there are some clients who are already availing your services. So I just wanted to know, what would be the approximate number of customers who are currently, engaged with your company, and going forward, what do you expect? I mean, what kind of numbers in terms of growth do you expect? And are you only focusing on the India market, or you are also looking at expanding outside?
So, as far as the Rely is concerned, as I said, that you Rely, we are signing up a couple of pilot projects in this particular quarter. So monetization you might see only by Q4, which is the next quarter. And as far as the framework, DocuXray framework is concerned, already we have a couple of clients. Clients are there from India and clients are there from overseas as well. So as far as these products and frameworks are concerned, we are just not restricting it to India. We are also looking at even other countries as well. And as far as data science solutions are concerned, we are providing within India and even outside India as well.
But any indication in terms of what would be the count of customers now and what you are expecting going forward? Because that will give a lot of confidence in terms of, how soon, the company could start generating profits.
So as I said that right now we have about 2 customers who are availing our DocuXray as a product, and Rely we are yet to sign. The pilot projects will be signed in this month or by first week of December. We are almost all on the verge of closure. And as far as the other projects are concerned, data science projects are concerned, we have close to about 4 customers.
And I mean, in terms of, say, normally what happens is in IT, you do a lot of POCs to, get confidence for new deals. So I presume, that would start reflecting maybe a couple of quarters down the line in terms of new clients and new acquisitions and all that.
Actually speaking, we are already doing a couple of POCs, but those POCs translating into revenue is taking expected then more time.
Okay.
Yeah, apart from the clients what we have spoken, we are also doing a couple of POCs when in the insurance sector and also one in legal tech sector, but it's taking more time.
Okay, sure. Thank you. Thank you, and wishing you all the very best.
Thank you very much.
Thank you. Ladies and gentlemen, a reminder to all participants that if you wish to ask a question, you may press star and 1 to join the question queue. Participants who wish to ask a question may press star and 1. to join the question queue. Our next question comes from the line of Ravindra, who is an individual investor. Please go ahead.
Hello, sir. Good evening. So my question is, am I audible?
Yeah, you're audible.
Yes, sir. So my question is, sir, the Docu X-ray product, which we are, helping the real estate companies for revenue recognition. Is it like a one company, one license thing, or in my understanding, the real estate companies have multiple subsidiaries. So is it going to be one license for one particular subsidiary? So how does it work, sir?
So it's not based on the license like one user or two user license. It is per.
Okay.
So pricing what we did was key. It depends upon the number of documents that they are going to process.
Okay.
So they can use.
For example, Shobham Limited must be having n number of projects, right? So each project will have its own Docu X-ray for the revenue reconciliation, or it's going to be. Is that a yes?
That doesn't matter. That doesn't matter. The reason being we are not going to charge per license. It is per document.
Okay. Understood, sir. Great. That answers my question. Thank you.
Yeah.
Thank you. Participants who wish to ask a question may press star and 1 to join the question queue. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone to join the question queue. A reminder that participants who wish to ask a question may press star and 1 to join the question queue. Anyone who wishes to ask a question may press star and 1. Any participant of the conference who wishes to ask a question may press star and 1 to join the question queue. Our next follow-up question comes from the line of Om Prakash Shah from Amite Investment. Please go ahead.
Sir, please give closing comments from Sandeepan, sir.
Sure. No, let's make sure that we don't have no more questions and I can do it. Am I audible?
Yeah,
Yes, sir.
Okay. Yeah, let's make sure. I will give the closing statement, surely.
Thank you.
Sandeep sir, there are no more questions in the conference. You can give the closing comments.
Oh, sir. So Prakash, you knew that. Okay. All right. So it has been one of the much more interesting and exciting quarters, to be very frank, in the last 2-3 quarters, because going to market, getting money in for products that you're building is always exciting, and the kind of interest, the kind of buzz it has created, the kind of immediate sign-ups we saw for the POCs, that has been very encouraging also, and both have happened in the same time. These are difficult things to kind of express. What is the product in today's age of kind of inclusivity and kind of integration is very difficult. So the lines are thinning. Finally, it's about solutions. And honestly, that is where I think companies like Xel come out with a little more understanding from the market, because there was a lot of buzz, everyone thinking that I can do every programming myself using ChatGPT. That euphoria, that false expectation has subsided in the market. People have realized that, yeah, it sounds very good, a good demo and the prototype is easy, but when it goes into actual work, it starts giving more wrong answers than right answers. So we need the right people to do it. That realization has dawned on the market. And that is the reason after this POCs, the patient talk and all, people are understanding the value that companies like us bring. And that's the renewed interest and conversion to revenue that is happening. I think this trend will go on. What has been a very satisfactory thing is that people have, once they have done the POC, they have been stunned at the level of accuracy. They have been understanding that there is a heaven and hell difference between what they have been able to achieve otherwise and what we have been able to do. And we are working with behemoths, we are working with large ones, and it's universal. Many of the POCs for disclosure's sake we can't really talk about, but just to give a flavor of some of these things, like one of the largest, food tech or food, actually not tech, food delivery things, their tech department, we are working with them for very advanced video analytics to make sure that a veg person doesn't get a non-veg dish. And these are extremely hard problems when you really think about it, but initially the euphoria was this was very simple to solve with all these big things and AI coming in. So that is the level we are at, and when we go and execute it, the conversion to go to a POC and actual shop and out, that happened within months. So that's the kind of pull that is happening, that even a large giant is moving fast because they realize that the timing and the value we bring is very important. So I'm looking forward to pretty good quarters up ahead. I think the environment matters and the clarity in the environment is getting there. The resurgence in startups and in other parts will also happen in the next 2-3 quarters. So overall, I guess the fact that we have been able to sustain, the fact that we have been able to persist and use that time to come up with good products, I think that will pay us off in good stead in the coming future. That's all. And I would like to take this occasion to thank my team. They have really worked out of their skin, everyone, in this time, because without that passion, that grit, and that whole focus that they have put in for the last 1 year, and when you build a product, there's no immediate realization of the work you have done, acceptance. It's a very patient process. The fact that they've diligently gone through it and we are seeing the good results of it, that's a very heartening sign. Thank you so much.
On behalf of Xelpmoc Design and Tech Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.